Corporate venture capital, CVC, is a tool commonly used for external corporate venturing, aiding in the integration of innovation from beyond the organizational boundaries. Strategic motivations propel corporations to pursue CVC investments, which serve not only to fill innovation gaps and access new technologies, but also to create real options and build ecosystems. CVC activities allow organizations to navigate both near and distant opportunities, fostering a blend of explorative and exploitative learning. We spent the last year investigating CVC units and found that not all CVCs operate the same way. In fact, our research began with a close-up observation of one CVC unit of a multinational corporation. We were puzzled to observe that a long-standing, active, and successful CVC unit had recently pivoted its primary operating model, including its search focus, processes, and personnel. Existing research tends to categorize CVC units based on observable factors, often overlooking the subtle behavioral components and the heterogeneity of processes. As our goal was to better understand the heterogeneity of CVC investment processes, we decided to delve deep into the 6 widely accepted CVC search subprocesses, i.e. deal origination and search, screening, evaluation, deal structuring, monitoring, and investment realization. Since CVCs are primarily a search for new technology and/or knowledge, we decided to use the organizational search lens to explore heterogeneity within CVCs. Additionally, we also wondered if the CVC setting can help us answer repeated calls from organizational search scholars for a more fine-grained analysis of the search process. The organizational search literature often treats the search process as a black box, obscuring the vital connection between search goals and methods. There's a significant lack of clarity in the problem definition phase, with poorly distributed roles and responsibilities. Initial views argued that search is predominantly exploitative. However, recent studies suggest explorative possibilities, indicating that search may be multidimensional. We investigated multiple cases, conducted 59 semi-structured interviews, observed investor and startup meetings, and combed through loads of archival data to uncover how CVC units operate. Based on the underlying data analysis, we developed 2 archetypes into which the CVC search process can be categorized: order takers and freebirds. Order takers are CVC units that invest in ventures aligned with the strategic priorities and problem formulations of the corporate parent, view their venture investments as a service to the corporate parent, and execute investments accordingly. Freebirds are CVC units that perceive themselves as proactive venture capitalists, therefore view their investments as instrumental in shaping the strategic trajectory of the parent organization by providing insights into technological trends and solutions. Let's delve into what distinguishes these pathways along the search process. Let's begin with the order takers. In this model, the corporate venture capital activities are closely aligned with the broader corporate strategy. Specifically, their search activities are aligned with corporate strategy, ensuring that every investment opportunity is vetted for its strategic fit. The screening process for potential investments is defined by the corporate parent. Similarly, assessment standards are set by the corporate parents. The approval for deals is not just a formality, but involves a comprehensive review by an investment committee made up of top management. Each potential investment must offer a clear value add that is of interest to the corporate parent, ensuring relevance and alignment. Lastly, the focus of investment realization is on fulfilling the corporate parent's agenda, emphasizing strategic rather than purely financial returns. In contrast to order takers, the freebirds operate with a high degree of independence from their corporate parents. Deal sourcing is fully independent, allowing the venture team to tap into opportunities based on market trends rather than corporate directives. The screening of deals leverages connections within the venture market, not just the corporate network. The decision-making process is streamlined, involving only key stakeholders from the CVC unit, which can speed up the process. Deal approvals are granted independently of the corporate parent, giving the CVC unit the autonomy to act quickly and decisively. In this model, financial performance and valuation metrics are the primary criteria for validating investments, focusing on tangible returns. Finally, the ultimate goal in the investment realization process is the maximization of valuation and exit strategies, prioritizing financial gains. We identify two idealized pathways and find evidence that the locus of problem formulation influences the resulting problem-solution pairs. Locus of problem formulation means where is the problem being formulated, inside or outside the corporate parent's boundaries. Order takers respond to a predefined and corporate-led problem formulation approach, resulting in a sequential and structured search method, which in turn results in clearly defined problem-solution pairs. Freebirds, on the other hand, often allow the emerging entrepreneurial market solutions to shape the problem formulation. They consequently adopt a more open-ended, adaptive search process, resulting in diverse problem-solution pairs that are not clearly defined, which in turn leads to diverse solutions that may anticipate future, yet to be identified corporate problems. Overall, we identified two extreme CVC designs driven by the locus of problem formulation, internal versus external, and point to differences across popular CVC subprocesses, which can be of interest for researchers and handy for CVC managers.